Welcome to Any Answers Answered for April 2021. As ever, Tim and I have picked a couple of questions from the pages of AccountingWEB, and we will have a go at answering them. And Tim, our first question this month comes from John, who asked the question related to one of his clients, whose office is, as he says, some distance from his home. Historically, he would have driven to and from the office each day, and the calculation of private motoring would have been around about 70%. He's now obviously working from home, as most people are, and as a result, the first question he's really asking here, does he need to change the private motoring percentage, in that of course now he's not travelling to the office and back every day, so there is no home to work travel. And then the second question relates to a balancing charge on the car, and he's actually disposed of this car during the last 12-month period. And the question is, how exactly should he calculate the private fraction based on the fact that there's been these changes?
Yeah, there'll be an awful lot of individuals in this situation. Is the client that we're looking at an employee, perhaps of his own company, or is he self-employed?
He's listed as self-employed.
Okay, well, the rules, of course, are different. And when you talk about temporary workplace, then that's a term in the context of tax relief on travel costs that relates to employees who might be working at a temporary workplace and therefore qualify for tax relief on home to work travel. But if we're looking at self-employed, then the question is simply, was the cost incurred wholly and exclusively for the purposes of the trade? And if he was traveling to his base of operations, his normal workplace, his office, we would talk of as his base of operations, home to work travel is not allowed, of course. So the question really is, now that he's working from home and home will have become his base of operations, could he claim relief for the costs of traveling occasionally, irregularly, and less frequently to the office, arguing that that is no longer a base of operations, but instead the expenses incurred wholly and exclusively for the purposes of his self-employment? I think not. I suspect, although it's not at all clear-cut, but I suspect that the office remains his base of operations, and he is, for a relatively, we hope, relatively short term, working from home. So he does have a different base of operations at the moment, but of course, home-to-home travels nil, so that doesn't help him. But I think he is still doing home-to-work travel when traveling to the office. So I'd be disinclined to give him relief for that. Now, of course, that does impinge also on the second part of the question, because I'm arguing that this would remain private travel, which will affect the percentage business to private. But the second question, remind us of that, Giles.
Yeah, so the second part of the question was that he has disposed of the car, sold the previous car halfway through the year when it was 4 years old. There was a significant balancing allowance. The question is, what do we consider would be reasonable percentage for private use adjustment? Would it be the larger amount that we were used to, or the smaller amount now, or some average of the two?
Yes, and this does crop up periodically. The Capital Allowances Act 2001, I think it's section 207, does refer to a just and reasonable method of apportioning allowances. And if, for example, in year 1, 2, and 3, the business use is, say, 70%, private use 30%, then you would qualify for 70% of writing down allowances. But if in year 4, the business use has declined from 70 to 50%, then year 4's writing down allowance would only be 50%. What if in year 5, you sell the car and there is a balancing charge? Now, it would be quite nice, wouldn't it, if you could say in year 5, my business use in the most recent year was only 50%, so I only want to pay tax on 50% of the balancing charge. Now, you might get away with that in the sense that I'm not sure that the revenue would argue that you've made a deliberately incorrect return by using that 50%. Is it just and reasonable? The revenue, I think, would want to argue that you should take an average. So you've got there, I think, 3 years where it was 70% and 1 year where it was 50%. And that would get your average to whatever it is. And that's the percentage that should be applied on the balancing charge, or conversely, if it's a balancing allowance, on the balancing allowance. So it's by no means clear cut, but I think just and reasonable is what we have to go for here, and not simply take the most recent business stroke private use percentage as the basis for the balancing adjustment.
I think it's an interesting question at the best of times, but particularly this year. I think a lot of people will be facing this problem this year, as there have been such substantial changes to the way that we do business. Let's look at our second question. This question comes from Cadoc Control and relates to returning furlough grants. The question is that they have been claiming furlough, presumably as an employer, from March 2020 all the way through to December 2020. Having dealt with the year-end accounts and the corporation tax the 31st of October 2020, they've now realised they actually had a pretty good year and they don't feel morally they should take the money, and therefore they're thinking of paying it back to the government. The question therefore is, in the second account, how on earth do we deal with a refund of furlough money?
Well, there are two schools of thought on this, and initially I might have subscribed to the first of the two, which says that despite the fact that the receipt of the coronavirus support payment, whatever it was, despite the fact that that was taxable, the voluntary repayment of such a support payment would not be tax deductible, because that voluntary repayment was not made as an expense of the trade incurred wholly and exclusively for the purpose of the trade. So initially, applying basic principles, you might come to the conclusion that voluntary repayment would not give rise to a deduction for tax purposes. But further research led me to, and indeed led one of the correspondents here, to the Revenue's Business Income Manual, and in particular to paragraph 40456. I think Paul Wakefield is the AccountingWEB member who drew our attention to this. And at the bottom of that website page, BIM 40456, which deals with the coronavirus support payments, it says, where there is an assessment, so this is HMRC's authoritative advice, where there is an assessment to recover overclaimed SEISS, that's the Self-Employed Income Support Scheme grant, CJRS, Coronavirus Job Retention Scheme grant, or payments made under any other Section 76 HMRC scheme, e.g. Eat Out to Help Out scheme. By the way, it's Section 76 of the Coronavirus Act 2020 that they're referring to there. But where there is an assessment to recover any of those grants, the amount of taxable coronavirus support payments is reduced accordingly. And then it says, where a claimant otherwise makes a repayment of any amount received under a Section 76 scheme, this should be treated as a reduction in the amount of taxable income received from the scheme. And so on the basis of that, I would say to the original questioner that the correct treatment is to amend the company tax return that they've already filed that included the furlough payments claimed by reducing the taxable profit by the amount that they have now repaid. And it will require, I think, an amendment to do that if they've already filed the return. But that seems to me, if you look at the Revenue's Business Income Manual, the way in which we deal with it.
Yeah, it's a very complicated area, one that I think we can safely say there will be more questions on the pages of any answers as a result.
Yes, and I think we can sympathise perhaps with HMRC and others in recognising that trying to think through all the different implications of all of these sorts of things in the pandemic itself is not easy, and it may take a while for some of the fog to clear and for tax treatment to become more self-explanatory.
Yeah, and well, that concludes any answers for this month. Any questions you post could well be included next month. Please do keep using the pages there, and perhaps next month it will be your question that Tim and I are having a look at. But for this month, bye-bye.